But low interest rates have been a contributing factor in the housing recovery. But with the steady rise in prices and some markets passing their previous peaks, Diana Olick tells us some are wondering if we're in a new bubble.
10 years ago last month, home prices nationally hit their peak of the housing boom. And we all know what happened after that. Values dropped for 6 years by the most in history. But somehow we are almost back where we were.
The pace of appreciation and the pace of achieving the new peak, that definitely was achieved more quickly than we would have expected. The reasons that we think that has happened now is the continued aggressive stance by the Fed to keep rates low.
June marks 4 straight years of national home price appreciation, with prices up 33% from that bottom in 2012. A new report from Black Knight Financial Services puts the average home price in June at $265,000. That is within just 1.1% of a new record high.
During the housing boom and bust, there was this industry-wide mistake of loose credit, overbuilding, euphoria, irrational exuberance in the housing market, and buying on a bet that prices would increase. That's not the market we're in now. What we're seeing is a more timid market, a more restrained market, and I would argue too restrained.
Prices today are instead being driven by a severe lack of supply of homes for sale, in addition to low rates. Of the nation's 40 largest cities, 14 have already seen home prices cross to new highs. Some argue we're not in a bubble because housing is still historically affordable, but it's only affordable if you can qualify for the low interest rates out there today.
Right now, it takes pristine credit to qualify for one of these great rates that are out there in the market today. It also requires a hefty down payment. And while, yes, there are some lower down payment programs out there, coming up with cash in this environment for some people is tough.
Precisely why first-time homebuyers are still such a small share of the market. Affordability, it seems, is in the eye of the mortgage holder. Diana Olick, CNBC Business News, Washington.